Enough of watching your investments blindly ride the indexes up one day, down the next with zero real strategy. Stop white-knuckling through every market swing, simply hoping for the best. The team at Rocklinc Investment Partners builds resilient, high-conviction portfolios using a strict value investing discipline, strong fundamentals, durable business models, and attractive valuations. We ignore fads and focus only on companies built to protect and grow your wealth responsibly for years to come. Take control today. Contact us at 905-631-5462 or info@rocklinc.com. That's link with a C. We're back. Jonathan Wellum joining us, CEO and President of Rocklinc Investment Partners. I'm very proud to have Rocklinc as a sponsor of this show. I'm also a client of Rocklinc's. I think they do a fantastic job not chasing trends, which of course land you in a lot of hot water. It's so tempting. The human condition being what it is, human nature being, you see something heading in a certain direction, you want to see if you can grab a tiger by the tail and see how far it takes you. Unfortunately, the market, it can drive you crazy because just when you get in thinking you're going to make a couple of bucks, it'll turn tail and go the other direction. It's impossible and I know that for speaking from experience, you cannot, as an individual, try to stay on top of market trends and think you're going to do okay when the people setting those trends are going to take advantage of you, essentially. I don't know. Jonathan, what do you think?
Absolutely. Just go back to 2022 and all of the real estate purchases that were going on in Canada. Everybody had to buy some rural property and go up north, and they were all going to work in a decentralized environment. And they just spiked the price. And now those same people, if they're selling, are taking a 30% plus hit. No, it's always easier to buy when other people are buying, but that's not always the best time. That's the problem. And so there is this emotional pull. Even as an investment professional, when things are going up, it's much easier to pull the trigger, and you have to catch yourself and say, oh, am I overpaying? What's the valuation of this business? Will it come at a cheaper price in the future? So you got to be very careful. Just to give you an example, I talked to a friend, a smart fellow. He's not in the investment business, but he knows the investment business quite well. He phoned me on Friday morning, very early in the morning, and he said, I sold some of my gold and silver securities. He's done very well, but he sold some of his gold and silver securities on Thursday, the day before. And I said, did you need the money? And when we walked through the reason, and part of it was I was just nervous about the market. On Friday and today, those same securities are up on average probably 15%. So you got to be very careful when everybody around you is kind of negative and jumping all over things. Know what your investment thesis is. Know why you own something and have the convictions to stick with it if the fundamentals haven't changed, and even to dollar cost average if the price is beaten down. You got the flip side right now. You got this SpaceX coming out. And Elon Musk right now, he's walking on water, right? And people are thrilled with him. And I must admit, he's an amazing entrepreneur. Thankful for him. You need men like that with tremendous vision, long-term focus. But you do have to be careful what you pay for his aspirations and for his dreams. And SpaceX is a good example of a company now that's trading at almost 2.5 trillion with 18 billion in revenue last year. Now that revenue is growing, but still you're paying over 100 times revenue, not earnings, revenue. And although he's got wonderful plans for that business, it will take time for that to unfold, years. And while he's doing that, there's going to be lots of ups and downs. And so a disciplined investor, I think, will be able to buy the stock much cheaper. And so again, be careful. Don't just chase it. I've had a number of people contact me and say, I got to be into SpaceX. And I go, why? It's going to go up. Well, so you got to go back to fundamentals at some point and anchor your decision-making in a framework that makes sense.
Yeah, I spoke with a guy a couple of days ago about SpaceX, and he said he was going to be shorting it. And I thought, there you go. So you're expecting the price to fall. You've got all sorts of investors piling into SpaceX, which has now raised a total of $85.7 billion. I think the goal is $75 billion.
Right.
And so he's already blown way past that I mean,
Yeah, remember that's only about 4% of the total value of his business. So when you are buying that piece, even though 85 billion is a big number, you're talking 2 trillion plus in terms of valuation. So it's not a large portion of his business. And Musk is very smart just to sell a small piece like that, which raises enough money for him. He doesn't have to give up much equity, but it means that there's not a lot of stock out there for people to chase, which means they can bid it up higher. One thing I would also say is I would not short Elon Musk. Although I might not buy, shorting Elon has never worked out that well unless you're really a good market timer in some of those shorts. There's been lots of volatility in stocks, don't get me wrong, but he's a good salesman and people will and have paid a premium for his stocks. So you got to be careful there.
yeah, some people have been badly burned shorting Tesla stock in the past.
Yeah.
And yeah, that's what happens when you bet against stocks that Elon Musk tends to own, is because of the hairpin turns that he makes and investments that he makes. You could get badly burned when the price skyrockets instead of falls. You're left holding the bag. Let's talk a little bit about the markets because they are way up today. At least tech stocks are, speaking of Musk. Tech stocks are up almost 3%, 2.88%, almost 750 points up. That's on the NASDAQ. Dow Jones done very well. It's up 1%, and the S&P up about 1.6%. So you were talking about gold earlier. I believe that is up too. So that's up over $100. That's about 2.5%. So gold is doing very well. Silver doing very well, up over 3%. And even crypto having a great day, up almost 4.5%, pushing over $2,800 up. What do you make of these numbers today?
On the NASDAQ, when you're looking at the tech stock, it's really the AI trade is back on again. So it's on again, off again, and it's on today. And so if you look through the index, you're going to see AI or artificial intelligence related securities, the data center focused kind of stocks. Those are the ones that are really up. The semiconductors also, you have Micron, I think the last I looked was up over almost 10%. So you are getting a focus in that area. Anything that's trading off of this large capital investments by the hyperscalers, the Googles, the Metas, the Amazon and so forth. Anything that's the beneficiary of those large capital spending, they are up a lot today. And I think that's just the sentiment that things might settle down in the Middle East for a little while, and we'll get back to focusing on building and construction. And also the SpaceX. A lot of people said that SpaceX was going to suck a lot of money out of the market. It was going to result in more of a pullback, but clearly that's wrong. If it's done anything, it's just made the market more enthusiastic and pumped on the tech side. So that's where the momentum is right now. But again, just caution people, know what you're buying, know why you're buying it, and be very careful of price sensitivity. There's some really high valuations, and people soon forget that markets can fall, and they can fall a lot if things slow down on the capital spending side.
Yeah, and I would expect SpaceX to correct.
Yeah.
If you're in there for the short term, who knows? You could maybe do very well, but you don't want to be holding the bag when everybody decides, I've made some money, I'm out. Because profit taking is always an issue when you're looking at stocks that go sky high. And those people are very much aware of valuations. They know when things are in a bubble, and when that bubble bursts, there's going to be a lot of people holding the bag, left holding the bag. And sadly, a lot of them are just going to be regular folks, just day-to-day investors, people who tried to predict where the market was headed. And so when you're talking about stocks that are part of the Rocklinc family of stocks, these are proven stocks. And so you shouldn't let the market and what it does sway you over one way or another when it comes to buying good stocks, because that's where discipline comes in, and that's where doing the right thing and knowing full well that you're in it for the long term comes through, correct?
That's correct. And so we think AI is going to continue to change a lot of businesses. We think the data centers, although there won't be as many built as people are sometimes estimating, but there's going to be a lot built, a lot of money. And so we are trying to find businesses that can benefit from these trends, but you don't have to necessarily be right in the belly of the beast. You don't have to necessarily buy the direct players. You can buy businesses that are outside the first circle, if you will, and will profit from it, but they also have large, defined, consistent businesses with margins and profitability. And this is a way they can enhance their profitability rather than be completely dependent upon it. So it's a little bit different. So you can buy some of the guys who are helping build the data centers, buy some of the real estate firms. You can buy some of the companies like Schneider Electric, which provide a lot of the componentry and construction. That's fine because that's not the only business they're dependent upon. They also have a broad-based global business behind them. And that's what I think is important. Because the other thing that people have to appreciate is AI is growing, no question. But we don't know what the ultimate demand will be, and we don't know the margins. Even Anthropic and OpenAI, which are going to be coming public soon, later, probably in the fall, they're starting to look at price cuts because they're realizing that the price of the AI is very expensive. It's constraining margins on the businesses that are buying their services and their language models. So the warning here is, look, there's a lot of moving parts. We do not know how to forecast the demand, the margins, the profitability. All of these things are really in flux. So be careful. There's going to be a lot of volatility and hiccups and opportunities to buy some of these stocks, I think, at much better prices for disciplined investors.
Fantastic. How do people find out more about the great service that you provide over there at Rocklink?
Yes, but probably the best is our website, rocklinc.com, link with a C at the end of it, and info@rocklinc.com. Just send us an email. We'll respond to you immediately and talk to you and explain how we manage money. And hopefully that'll be a fit with the person contacting us. We have a number of listeners that have become clients, and we appreciate them. Wonderful listeners who are good conservatives and patriots and fighting the woke and left-wing agenda in this country, which we love.
Thank you so much for coming on the show, Jonathan. Appreciate
Thanks, Mark.
sponsor as well. Jonathan Wellum, Rocklink Investment Partners.